At 4.1%. Joining us now, Jim Bianco of Bianco Research. Jim, welcome to the programme, sir. What are you looking for in about 12 minutes' time?
Probably looking at the October report as much as the November. I'd like to joke that this is the, monthly payrolls report because we had 47% response rate for October. On the second pass, that usually rises to about 95%. We could actually get more respondents for the October payroll report in this revision than we got in the initial release. And that number could go up a lot because a lot of those businesses were closed because of the hurricanes, and they've reopened and they've re-reported that they've actually got employees. So not only does November matter, but October matters just as much. And if we get 220,000, say around the payroll, around the estimate, and we get a big upward revision, that's going to put the Fed in a tight spot because we're only at 68% that they're going to cut rates in the December meeting, and a strong number could push it to 50-50.
Jim, you're a no-lander. You say inflation looks like it bottomed this summer. You think they shouldn't be cutting in December, regardless of what these numbers look like over the next week or so. How big is the gap between you and them at the moment?
Oh, I think it depends, because if you look at the dot chart, they're all over the place right now, the Fed. The one thing that Chairman Powell likes to, say is that there's some kind of unanimity or unanimous consensus view. The dot chart says there isn't. There's still, members that think that they need to cut 2 more times this year, and we got 1 meeting left. And there's members that think that they don't need to cut. And if you look at like the long-term dot, they can't agree on where the neutral rate is. It's anywhere between 2.5% and almost 4%. So I think, I'm in the no landing camp. I'm in the camp that the economy is doing fine. I'm in the camp that says, Jay Powell, look at the rise of long-term yields. It is a signal to you that these cuts that we have done is unnecessary. The market is just more worried about that you're creating too much stimulus and potentially an inflation problem. But we'll see. We'll see what winds up happening in 10 minutes and next week with CPI and which way they go.
If we do get a strong number, Jim, is this bond market mispriced then? I know you said yields have been moving higher, but they've actually been moving lower in the past month. We are near the lows of the recent months of this 10-year yield. Is something mispriced with all of the more optimistic estimates out there for what the jobs figure is going to look like today?
No, I think, the bond market moves on more than just a payroll report. It also moves on what's happening in Europe and the weakness there. We've seen some strength in the dollar, potentially a mini flight to quality as the French government collapses and in what's happening in South Korea, maybe pushing people into the U.S. Treasury market because it is the reserve currency. But to your original question, I got to say it. Look, if we get a strong number and those probabilities go to 50-50, the Fed has made a terrible mistake because they're in their quiet period. And now we're going to be back to where we were in September. We're going to be watching the Wall Street Journal reporter, Nick Timiraos, who's the effective Federal Reserve Chairman during the quiet period, and whether or not he gets that call from unknown that says Blue Horseshoe likes 25 or not and reports it in the paper. And that's how global financial markets are going to be working for the next 10 days on a strong number. It's not what the Fed wanted, but they've created this monster.
Jim, talk to me about how problematic that is for communication of the Federal Reserve. Is that a problem? That the named reporter that you name, and it's certainly not his fault, and many journalists envy him of the position he has. But how problematic is that?
It's hugely problematic because you're right. It is not his fault. The Fed kind of created a system that put him into that position because now he's got to be careful of the opinions he has. If he writes an opinion piece that this is my opinion, it could be mistaken for that, unknown phone call. And that people will think that this is a policy prescription, and he could be creating policy when that was not his intention all along. So, yeah, they've created a huge problem with this. It'd be, if we get a weak number and the probabilities go to 95%, then it's not a problem. But this could be the second time in like 4 months that this is going to happen to the Fed.
Well, Jim, we all remembered before the Fed moved 50 basis points worth of a cut with that Nick Timiraos story, we couldn't figure out whether that was from Fed officials or whether that was his opinion. How much of that, though, leads to a volatile bond market? We've seen that play out time and time again, where the messaging has been strange at times, has been through media, and you get that volatility. What does that mean for 2025 when we're set to get even more volatility because of the different prescriptions we're going to get from fiscal policy?
Oh, I agree. I mean, we're going to get from fiscal policy, we're going to be, everybody's going to get a Truth Social account. And we're also going to be watching the, Nick Timiraos during the quiet periods. And any one of these stories can swing markets one way or the other. And then, like I said, we haven't even thrown in the idea that maybe inflation is ticking up, maybe Europe is weakening, maybe Germany is going into recession. All of this is going to play into a volatile cocktail for the U.S. bond market. And, you know, you mentioned also, I should say, you know, that everybody's at 6,600 for their forecasts. I understand those forecasts, but the fly in the ointment of those forecasts could be is everybody agrees that, no, the economy's strong. The Fed doesn't need to cut rates. The offset to all those forecasts are going to be you're going to have to go to 6,600 in the S&P with rapidly rising long-term yields, because that's going to be the natural response to the bond market is yields will go up in response to potentially more inflation and in response to stronger growth. And that could be a drag on a lot of those forecasts.
Jim, I know you're making the point that the data is good. And to John's point yesterday, and I brought up politics, he said the data is good and that potentially is going to help the Fed. But how political will it look if they do not cut in December and they cut twice, or once before an election and once during an election week?
Oh, I think they've already baked their cake with it. That's why that 50 basis point move in September was such a mistake. Because even if they cut in December and refrain in January, and you're right, the data could look good and it could be a perfectly logical reason. But then somebody with a True Social account is going to say, you cut rates before the election, and then when I won, you stopped. And that's going to be a difficult thing for them to have to communicate through. But they set this up with that 50 basis point move, you know, 7 weeks before the election. So they made it look political. And if they stop, they make it look political. And if they keep going because they're afraid of the politics of it, they may exacerbate a policy mistake. This is, I'm sorry, they made this bed for themselves. Now they got to lie in it.
Jim, that post was incomplete. The next line reads, and that's why I nominate Kevin Warsh to be the next chairman of the Federal Reserve. Jim, how early are you expecting that change to happen, even if he just makes the nomination and we have to wait for the term to finish?
You know, I know that President-elect Trump is very close with Kevin Warsh. He didn't get Treasury. He didn't get NEC, National Economic Council. I think he's got a plan for him. It's not that, Kevin, I'm sorry, there's nowhere in your position here. And I think that's Federal Reserve Chairman. And if you saw what Scott Bessent, the Treasury Secretary designate, said, that we might have a shadow Fed chairman and nominate him probably this spring or summer. And then everything that the Fed does, you'll have Kevin Warsh on your panel, on your studio during Fed meetings to basically second guess whatever Chairman Powell says at every press conference and at every Federal Reserve meeting. And so this could become another source of, you know, volatility for the market. Well, there's what the chairman says, and then there's what the next chairman thinks. And so we could wind up seeing something along those lines, too.
This could be messy, Jim. Appreciate it, sir. Jim Bianco of Bianco Research on the Federal Reserve and the jobs number, which drops in 4 minutes' time. It is just around the corner.